Hello traders, this is Rich Derrick from tradesight. This is the market preview for Thursday, January 3rd. The markets enjoyed a very strong session to kick off the new year, with most of the major averages really posting one of the better sessions that they had all of 2012. The ES futures were higher by more than 2.5%, and the NQ futures were higher by 3%, and we'll look at those technicals in detail in a little bit. The first few days of the new trading year are always very closely watched. While these first trading days are going to be very news driven, we're definitely going to have to be on guard for a very short-term overbought condition that has presented itself. So let's take a look at the S&P futures and then also the NASDAQ futures, and then let's dig down into some of the market internals and also the intermarkets as well. Here's a look at the ES futures with the levels. Ignore the extra candle that the chart is printing; it just doesn't mean anything. We obviously had this breakdown where we closed in the area of the 200 DMA. Then on the day before the holiday, we had the very strong up day. And of course, we've got this very large gap left in the market here into today's trading session. So the market is pivoted and broken above this key 4-ace level, and is actually, if you take a look at the cursor here, in the area of the prior high close. Hasn't quite bested it, but it's definitely in that area. The session was very strong for sure, but you can see the CCI is getting into being very close to being overbought here. So that's definitely something that we're going to keep keeping an eye on tomorrow. Next challenge is going to be the 6-ace level here on the Murray Math, 1468 3/4. That represents the high watermark of this prior range. But of course, keep in mind that we've got this very large gap in place that starts around 1443.5. And a breakdown into that area will open the door for at least the half gap fill, and then if that gets done, then we'll consider the full half gap, the full fill. Now here's a look at the NASDAQ futures. Again, we pivoted very strongly off of the reversal candle from the previous session. We're above all three major moving averages, the 50, the 200, and obviously the 10 here. We cleared up into this little bit of a void above prior resistance. So now we're into the Murray Math levels, where the 7-ace level was a previous resistance here at 27.73, and then that 8-ace level at 28.12 is definitely going to be a head knocker if we can get there. But again, we've left this very large gap, and the thing to keep in mind here is that we essentially closed the last real trading session of the year 25.85, let's call it. This large reversal candle was actually a holiday session on very light volume, and then now we're gapping up and powering up to this 6-ace level. So really, I'm kind of looking at the last two trading days as really one candle. So the move is really from this prior close here around 25.85 all the way up to 27.35 or so. So this is a very sharp move, and this whole thing can almost be considered a gap, and that's probably the way a lot of professional traders are treating it. I don't think there's a lot of commitment either way today from the professional traders. I think the session today was probably more dominated by, the more the funds and beginning of the year flows, and obviously some shorts really scrambling. Tomorrow, I think it's going to be much more tradable, and I think we really need to pay attention to today's range and be very wary of that gap below. Here's a look at the multi-sector chart. All the sectors had different degrees of strength. The XAU, as you would probably expect, was lagging. The green line here, which represents the banking index, actually broke out to a new high. Here's the previous high. Made this little attempt, pulled back. Now they're trying to pivot back and above that. So that's usually a very positive sign for the market when the financials are acting well. We'll talk about the BTK a little, the BKX a little bit more when we pull up the the chart with levels. Now here's the put-call ratio. The put-call ratio did not record a climactic reading. We're still within the bounds of the typical trading, so really nothing there yet. This is definitely something that we're going to be keeping an eye on going forward to see if we do get that real overbought, overly bullish reading, with a real low reading below 0.5 or so. But so far everything's fine and nothing really to get concerned about. Just here's a look at our 10-day trend, which is really pretty much right in the middle of the overbought and oversold threshold. So this definitely, we recorded this very, very overdone reading down here, where this very, very low reading was implying that we were going to turn back down. But that was more than a week ago. So this is back into the middle of the range. So what we're looking at here is really just kind of normal kind of a reading. So there's plenty of gas in the tank here before we reach up and record an overbought reading that will be back below the 0.85 level. Here's the NDX versus the SPX, so that'd be the NASDAQ versus the broad market. You can see that we in the comparison chart here, this is the ratio chart. We did see a bump up in some relative strength starting to develop in the NDX. This is a very bullish development. What I really want to see though is I want to see us get back above this trend line, back into this prior range, and sustain that, and then perhaps if the market remains bullish enough, walk back up into this area here of the prior high of the channel. This would be a very bullish development and be one of those signals that would be getting us on the longer side for more of a longer term trade, something that would last a little bit longer. So once this gets taken, this particular level is about 189 right now. That's the ratio. If we get back above that, then we're gonna start to see some sustainable upside develop. But until that gets taken, we still have to be a little bit cautious here and be careful of and mindful of that gap that remains below, left open from the NASDAQ. Okay, now of all the stocks that we're going to talk about, this is the one that's sticking out the most to me. This is the S&P versus the TLT. So it's essentially the broad market versus the government bonds. What we're looking for here, or what the bulls want to see, is they want to see the S&P really start to assert itself and see some money rotate out of the bonds. There's a ton of money trapped in the bond market, and if those folks decide to evacuate and finally migrate away from the safety of the bonds into the more growth-oriented broad market with stocks and dividends and whatnot, then we could see a lasting source of funds for the overall broad market. We've been kind of in this little trend channel here, where it had essentially been a risk-off trade, which is where you kind of see the S&P really just not being able to assert itself. When this chart is rising, that means that the S&P is the ratio here is working in favor of stocks versus bonds. When it's declining in this trend like this, that means that folks have more of a defensive posture and they're really favoring safety over growth. We saw a little bit of a bump down here in the chart where we got a little bit overdone, a little bit maybe overdone with the safety trade. We kind of returned back to the norm here, back into this channel. We broke above it. This is a few weeks ago, towards the middle of December. Then we broke back down again. But this reading that we got as of today's close is very positive and really kind of potentially changes what we're seeing here in this pattern. So if we can build on this going forward, this will be very, very bullish long term for stocks, and this source of funds could be very, 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 very formidable and make for a very nice uptrend to trade. Now let's take a look at some of the individual sectors. Here's the semiconductors, the stocks. This was definitely the best performer of the day. It was up over 4%. We've now kind of jump roped above all of the major moving averages. By jump roping, I mean we've cleared it with a gap. Now printing above all the major moving averages. Pushed up to the 7/8 level here. This 8/8 level I would expect is going to be very formidable going forward for the stocks. This is a pretty sharp move that we've covered a lot of territory in the last 2 2 days. This is the biggest 2-day move that we've seen, I believe, in 12 months. Also note here that the CCI is well into that overbought territory. So this is one of those things that while the chart looks good, it's probably going to need a little bit of time to kind of handle up here a little bit, maybe do some work here at this 8 days level before ultimately pushing higher if that's the way the market chooses. And don't forget the 200 DMA likes to be gamed, traded back and forth. And that hasn't happened yet because we just jumped up to above that level. So if we start to break down, that's going to be a magnet back down to that area. That area right now, I'll just mark it off for you, is about 1387.5. So we start to break down again. That's going to be a very, very key draw for the market here in the semiconductors. Now the BTK was very strong on the day. Also the Nasdaq Biotechs. This has been one of the better performers and certainly one of the best performers of the prior year in 2012. This is right up in here, close to the old high. It just missed, or you could probably even say this, as far as technicals goes, you can say this filled this prior gap over here. Next level is going to be this 8 days level at 1625. Here's a look at the BKX, the banking index. Definitely one of the better performers of late. Still above all the major moving averages now, and the one thing that's very positive about this is the way these are stacked. We've got the 200 with the 50 above it, and then above that we've got the 10. So as far as a bullish formation with the moving averages, this is what technicians like to see. That's very, very positive. Made this pretty good push up here to the new high. We broke decisively through that during the regular trading day here. And we pushed up very, very close to this 8 days level. So just over $53 in the BKX is going to be the first place that we're going to find some resistance. Here's a look at the XAU, which remains negative. The 50 DMA and also the 200 are both still pointing downwards. This has been a source of funds and is really still in this the same downtrend here. Not really too much to say about this. Obviously, if this can continue higher, we're going to be looking at the 4 days level around 175 here. But just above that, then we start getting into this layered overhead again. So the XAU really more of a source of funds right now, and is had been underperforming for most of 2012 and certainly the second half. And we'll have to see them really want to do something with this and really put some money to work here before this thing really takes shape and we start to see these moving averages pointing higher again. Oil was higher on the day, settling for the first time in a while above the 200 DMA. The chart has really been basing really well. This is a kind of a short-term snapshot of the basing that's been going on. If you take a look at the longer pattern here, we had this breakdown from above 105, used this 100 level for support. We broke down. We did 9 bars down here in the seeker setup. We completed 13 bars down here to complete the seeker countdown phase and get the exhaustion signal. Now we've really been just kind of marking time, going sideways. We set up this higher low versus where we got the signal, and now we're finally starting to break a little bit higher here and potentially gearing up here to at least take a shot at this 8 days level at 100. So this definitely looks bullish. The CCI is not cooked yet. It's got this decent looking slope to it. So this is definitely something that traders should be considering on the long side. So this is our look for our preview for the trading day coming up tomorrow. Again, if you have any questions, feel free to stop by and take a trial. And if you have any comments, please feel free to leave some comments here on the YouTube page, and we'd be happy to take a look at those and try and make our video presentations as useful as possible. And again, this is Rich Derrick from tradesight, and thanks for listening.